Okay, well, part of our Thursday's Business and Markets briefing is the annual meetings of the Chartered Institute of Stockbrokers taken today in downtown Lagos. But of course, it's also a day we're reviewing part of the debt market auctions that we saw on Wednesday. Let's get back to the Nigerian Stock Exchange to take a look at some of these in a bit more details for you. Ayodeji Ebro is the Managing Director and CEO at Afrinvest Securities. Ayodeji, good morning. It's good to have you on the program. We know it's a very busy day for you being part of the CIS annual program. So just a few minutes of your time, then we'll set you on your way to that conference. So let's bring us up to speed. What are the key issues here that you think your community should focus on at this particular time?
Yes, thank you, Boastin. Thanks for having me. This year, the CIS community, being the 26th annual conference, have decided to examine the dynamics in the Nigerian economy as well as the capital market, while we'll try to look at how to position the market for growth in the next few years. And some of the highlights that we'll also be discussing is to look at how the market can be driven by technology, which we know what using fintech, how we can be able to expand, deepen the market based on products. We've seen what is being done through that in the finance community. We'll also be looking at what next after the 2019 election. What are those major products that we should be introducing, as well as even for the government, because you cannot dissociate the capital market from the economy. So based on policies that government will also need to introduce, also looking at the impact of the ERGP, how it can impact the economy, as well as how that can translate to the capital market. So we feel the two-day event is going to be very packed, and we're expecting a lot of dignitaries to come and share their views on how we can channel a way forward for the Nigeria capital market.
But of course, the market is also going through its own patch at a time when politics is making the front page. So are you folks looking at what happens after? I'm not sure there's much anyone can do between now and 2019 general elections and perhaps the handing over. So are you folks taking a look at the crystal ball? What do you think the market should be doing? Maybe on the side of the government, maybe on the side of the regulators?
Yes, it's part of the sessions that we'll be looking at after 2019, what's next, to examine in terms of what should be the focus of the government after the election. How can some of the economy policy be also tweaked to also favor the capital market? We know that the capital market plays a very significant role in terms of supporting the economy. So you can be able to raise capital either for infrastructure. Also, the government also try to use that to finance its budget deficit. So there's a lot that the role that the capital markets can play, but it's about how we can station the policy, economy policy that can help boost in terms of confidence and participation in the Nigerian capital market.
Okay. We wish you folks all the best on that front. Whatever you folks are discussing, we'll be taking a very close look at that. But let's talk about yesterday's Treasury auction. Is there anything there between the Treasury auction and the savings bond in terms of where the yield curve is for you looking at the fundamentals around that market?
Yes, the fixed income market, we will notice that in the last 2 weeks, we've seen reduced sell-off from foreign portfolio investors, which pushed their yield to an high of about 15%. And we've seen renewed interest from local investors. Narrowing it to the primary market auction we saw yesterday, we saw significant interest for the 364-day. The bid to cover ratio was around 3.7 times. And we saw there was a slight reduction in the stop rate from 13.475 at the last auction to about 13.33%. That signifies that a lot of investors may feel comfortable with the current level of interest rate, and as such, trying to go long and lock in their investment for 1 year. We didn't see as much interest in the 91-day and 182-day as much as we saw in the 364-day instrument. Looking at this morning, the CBN announced the OMO auction for the 162-day instrument as well as the 364-day instrument at 12.5% and 13.5%. That would also reduce the liquidity in the system. I think the total offer was about 400 billion, 100 billion for the 182-day instrument and 300 billion for the 364-day instrument. And we're also expecting maturity about 268 billion naira today. So we expect that what we would see in the market going forward will be the longer term instruments would shift towards what we'll have at the stop rate for the bond OMO auction today, as well as the primary market auction. So we expect that rates at the longer end of the curve would move towards the 13% mark, which translates to a yield of close to 15%.
Okay, Ayo, just before you go, what about the planned part 2 or the second tranche of phase 2 of the Sukuk bond that the news came a few days ago? Do you think it's a good time to go to the market on the FG side on this?
Yes, I think it's a good time. When we look at the last offer, because of the way it's structured, it's always like the last one was tied to a particular project, about 25 major roads across 6 geopolitical zones. So we expect that if they're also going to come out for any offer this time around again, will also be tied to a major project. This would also be a deviation from the norm that government would raises funds and all channel it to recurrent expenditure. So for most investors, in terms of also the criteria being PENCON compliant, as well as the structure that is guaranteed by the fate of the federal government, we would see renewed interest. Though in terms of the pricing, maybe compared to what was obtainable before, may be lower because yields were significantly higher then when they came out in 2017. So we would be looking forward to that, but it also requires the approval of the Senate. So depending on when the Senate resumes, we don't think that anything can happen before then.
Okay. All right, thank you very much for your insight. We appreciate that. Managing Director and Chief Executive Officer at Afrinvest Securities. Of course, when you talk about the primary market, whether it's the central bank or the debt management office, all of that goes straight to the secondary market. And of course, when you talk about the big ticket and the deep end of the debt and the FX market, you're talking about FMDQ, OTC Securities Exchange. So let's get a sense of how the primary auctions and what's now happening to the secondary side of it when the active trading kicks into all of this, of course, on a regular basis, daily basis at FMDQ. So let's get this sense from the marketplace at FMDQ Exchange Place. Femi Ogudimu is joining us. He's a fixed income dealer at Diamond Bank. He's joining us from the FMDQ Exchange Place in Victoria Island. Thank you very much for coming through on Skype. Femi, good morning. It's good to see you.
Thank you very much for having me.
I'm sure you may have taken some time to listen to Ayodele there. Of course, it was a bit of a primary auctions here and there, but take it all to the secondary market. How are you dealers dealing with these auctions that are now on the street?
Well, for the market yesterday, right, what happened was the market was a bit, for the two markets, that's the fixed income, for the bond and the treasury bill market, we saw a bit of different reactions to the, to the outcome of the NTB auction that happened yesterday. For the treasury bill auction, we saw market trade very, very cautiously because while they anticipated the outcome of the MPC, of the NTB NTB result. And so you found that although there are some few tradings, the trade that was done was more bearish in nature, because you see that yield dropped by about 5 basis points at the NTB. Well, eventually you found that rates, after the market was released, the rates were released, you would see that the results are that rates dropped from 30.75 the last auction to the 30.33% this auction, and they sold about 133.49 billion in total. That's for the NTB on Treasury bills arm. For the bond market, we saw a bit of a bullish trend because the reaction was a bit different to the auction, to the Treasury bill market. One of the major reasons for the difference is that for the bond auction, we saw that market has been very liquid, and they have about over 400 billion in the market. Also, CBN hasn't issued OMO in a while. So with the liquidity in the market and everything that's been happening, so we saw people cherry picking on portfolios or maturities that are above 10 year that have 15% yields in that space. Today, of course there'll be auction today. There'll be almost auction today, and we believe that this will drive what will happen in the market today to a large extent. Market players are still observing, trying to look at what best to do. But for today, we anticipate that there will be on the bond side, there might be a slowdown in buying interest pending when the OMO auction will come out. OMO auction will come out. Same thing might apply to the NTB. Although the Treasury bill market, the Treasury bill market, the way market happened yesterday, where it was calm, based on the results that came out, market would trade based on that sentiment, and you would see that there will be a little bit bullish market, because the signal of CBN right now is that they're dropping rates gradually, and as such, you'll find out that market wants to take up all the available high yields in the market in the interior, pending when as in view that market rates might drop further. Thank you.
Afemi, do you think investors, whether local or foreign, are looking at this market as we enter the final quarter of the year with a bit of some bargain hunting? At what end of the yield curve are they trying to lock in some gains before the end of the year, looking at a very major slowdown on the equity side of the street?
Well, the reaction from both the local and foreign is a bit different. For the foreign market, for the foreign players, the foreign portfolio investors, they are looking more at the polity, because of the elections that are coming up. So they're a bit concerned about, what will happen. So for them, it's all about return of investment and more than return on investment. So if you look at return of investment, you want to ensure that your principal comes back to you first. And so when you look at the election and everything that's happening within the economy, they would want to be safe, So you might find out that they might not be too moved even if rates are hiked at the market. For the local players, I told you before that at the bond market, you found that they were buying aggressively on the long-term bond, because they found that 15% seemed like a very decent yield. So for the local players, okay, let me take you back a bit, all right? Because of the sell down in the past couple of weeks by the foreign investors, considering the election happenings around, yields went as high as 15.4%, and you found that it's a very good yield for local players to actually tap into at this time. So you see local players buying anything above 15%, and you see that as the yields drop, if market feels that the foreign investors are going to continue exiting, they might still hold on a bit from buying further. However, at this point in time, because there's been a slowdown, I feel that anything that seems like a high yield between 15% or 14.9 thereabout, they will take in the market. On the Treasury bills arm, the same thing will likely happen. The effective yield for the 1 year bond is roughly about 15.37%. So that seems like a very good yield to get into the market. So for the local players, they're going to keep buying, but for the foreign investors, they're going to play on the side of caution, whether they want to exit the market or they want to, or stay. The ones that are ready to stay might look at it and they have to look at the gains from it. So maybe they might want to see yields get higher before they can stay. But generally, we've seen a lot of exit from them, and I believe that might continue towards the end of this quarter.
Femi, very insightful conversation with you on the fixed income and currency market. Of course, that's the Femi Ogundimu, fixed income securities dealer of Diamond Bank at FMDQ Exchange Place in downtown Lagos. Thank you very much for this conversation. We'll return to the equities market when we come back.